Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADMISI Associates International Limited. Here's your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A bearish black crow yesterday, but that is not all. You see, you could look at it as a bearish dark cloud cover pattern type, but I personally don't think that the market did enough for that. You could also look at it as part of a day two of a two-day tweezer top, but we will not know that for a few days yet. And finally, you could look at it as a possible higher yet indecisive spinning top, but that just doesn't look right to me. Hence, I'll leave it as just a bearish black crow for the moment. Overall, the market continues to move up and away from two descending triangle patterns formed since March. Potential targets on the upside for these descending triangles, as well as the double stroke triple bottoms formed over the same period, are as follows. For the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I had a primary target X3 in the 120.5 area, which was reached last week, and a harder to get secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Okay, I hope you've got all of that. The next significant resistance is the April 2012 high at 125.96. Now, so far today, a little weak at the start, but that weakness has been folded into a pullback up today, with moving away from the unchanged position, which was sitting around the 61.8% Fibonacci line at 122.99. To be honest, it wouldn't take much to make this a key reversal up, but that's asking too much at this particular point. There's still plenty of things on the top side. We'll see. Spot gold. A reactionary bearish black crow, with the market piercing the support of the flatlining long moving average below, currently 1843, but failing to manage to close below it. Overhead, we still have the resistance of the 50% Fibonacci line of the March 21 to March 22 move at 1873. It continues to be very much like watching someone treading water, a lot going on, but going nowhere. We still have nearby the broken upper time, currently 1774, the early March, late April bearish Andrews pitchwood. I really would like to tidy up this daily chart and retire this pitchwood, but as long as we maintain these unmoving actions, then I feel obliged to keep it on here. And before you ask, no, I have chosen not to draw a bearish shift pitchfork for the same reason, for the same move as the Andrews, because every time I start, I see that it adds nothing to the current situation. So far today, a move lower from the open, but the market's getting entangled with the long moving average below and not managing to go much lower right now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADMISI Associates International Limited. And here comes the final bit.